All right, good evening, traders. Today is January 16th, 2024. My name is John Kerrigan. I moderate the BYOB Trading Room. All right, tonight's webinar is supposed to be on entries, stops, and profit taking. I got a little spin on it, okay? I'm just filling in for tonight, and I'm happy to fill in. This is I'm going to call it day trading entries, stops, and profit taking. Now, if you're into swing trading, you're just going to use bigger time frames. That's all there is to it. I'm a day trader. I like fast money. I like quick profits. I like quick stops. I like quick profit taking. So it's just the same thing, only you're going to use a bigger time frame. All right, so don't get spooked because it says day trading. This is this translates or transitions into swing trading, any forex trading, anything else. Okay, it transcends all markets. All right, so let me get started here. See if this works. All right, it's working. Okay, so my name is John Kerrigan. I moderate the BYOB Trading Room. I run BYOBtrading.com. This is my email address. All right, feel free to email me any questions. I'll do my best to get back to you as soon as possible. This is my YouTube. This video will be available on my YouTube. All right, so if you're not a member or a channel subscriber, please go by YouTube and put this address in and subscribe for it. If you'd like a copy of this PowerPoint presentation, just email me. I will gladly send you a copy. Okay. I believe your time is valuable. This webinar is being recorded. And like I said, it'll be on my YouTube channel. Again, there's an underscore right here. It's at your own underscore boss. Okay, again, the PowerPoint presentation is available if you want it. All you got to do is email me. All right, before we go any further, let's start with the disclaimer, okay? Trading involves significant risk, all right? You need to do your own due diligence, all right? Any communication from us is not financial or trading advice, all right? We're simply sharing how we succeed in the markets. So you need to test, do whatever you need to do before you implement real money in trading our approach. You need to test it and make sure it is something you're comfortable with doing, okay? Again, this is how we make money. We're sharing it with you, how we make money in the markets. And like I said, past performance does not guarantee future results. Okay, so everybody knows I'm a day trader. I like trading the 10-minute chart, all right? That's my chart of choice. When market opens up in the morning, I'm usually on either a 2, a 5, or a 10-minute chart first thing in the morning. Most times it's a 2, then I transition to a 5, and then right into a 10. And then once I'm in a trade, I flip to a 15. Okay? I like managing my 10-minute trades on a 15-minute chart. Okay? I like trading SPY options. It's pretty much all I trade. I've had tremendous success trading SPY options. I like SPY options because they're highly liquid and they have some that expire every day. Now, I typically trade the options that expire on Friday. Those are my preferable because they got more open interest. All right, here it is. I prefer directional, in the money, over $1 difference from where price is at, like $1 or $2 in the money. Calls and puts that expire on Friday because there's usually more open interest. Okay, what does more open interest translate into? Usually it translates into a tighter bid-ask spread, okay? So instead of there being 15 or 20 cents between the bid and the ask on a particular option, it usually tightens up, and the closer you get to zero, the tighter it gets. but it usually tightens up to like maybe 5 or 10 cents or even less than that. I trade some that are tight enough where there's a penny between the bid and the ask. They're just like the bid would be 79 cents and the ask would be 80 cents. So there's an example there of bid ask. So I like Fridays because it's more open interest on Fridays. So let me see if I can move this. Here we go. All right. So my favorite trade is the 3 EMA crossing over the 8 EMA on a 10-minute chart. That's my favorite. All right. I like it. I prefer it to be either over or under. If it's bullish, if it's a bullish cross, in other words, the 3 is going to be the faster one. If the 3 is crosses over the top of the 8, I prefer that cross to be over VWAP. It doesn't have to be, but I prefer it. If that cross happens where the 3 crosses under the 8, I prefer that to happen under VWAP. It doesn't have to happen, but I prefer it when it's like that. So there's. All right, I like to trade in the direction of the market. If the market's moving down, I want to be bearish. If the market's moving up, I want to be bullish. Market direction is critical. All right, so for me, because I trade the SPY, which happens to be the market, I need to be very sure of where price is going and which side of price action I wish to be on, because that's pretty much all I trade is SPY. Now, I do trade some other products. I trade gold, silver, nat gas, and sometimes crude oil. Not very often, but sometimes. All right, my success is 110% dependent on my ability to follow my own rules. All right? If you don't have a trading plan, please write one for yourself. Your success, as long as you follow your plan, your trading plan should bring you success in the market, whether it's day trading or swing trading, okay? If it does not, then we need to rewrite our plans. And believe me, it wouldn't be the first time I've had to rewrite my plan. I had to rewrite my plan several times before I found something that I liked, that I consider to be my new plan and my new formula for success. So in other words, your trading plan is going to be your formula for success when you trade the markets. Okay, I'm going to go through a few things that I like to use. Okay, the first one is VWAP. It's volume weighted average price. Okay, it's the average price of shares traded from the beginning of the trading day. Okay, it's going to act like a moving average. So it's going to take all of the shares that traded and at each price they traded them at, okay, and it's going to give us the average that it traded during each segment. So it's going to move wherever price moves. So if price moves up, anchor VWAP will typically chase price up. If price moves down, VWAP will pretty much chase price down. Okay? The other one I like to trade is anchored VWAP. I don't trade these. I use them as indicators. Okay? Both VWAP and anchored VWAP. Okay? Anchored VWAP is anchored volume weighted average price, and it is the average price shares traded at from the place in time where it is anchored. The nice thing about anchored VWAP is you can anchor it 5 years back, 1 year back, 1 month back, 2 days back, 3 weeks back. You can anchor it back to the FOMC meeting. You can anchor it back to the previous low. You can anchor it to the all-time high. All right? It will act like a moving average as well. So I like anchored VWAP. It tells me what's been going on since we made that high or since we've made that low. Does the market still see value in a particular product? Is money flowing in or is money flowing out of the market? Okay, so where should I place my anchored VWAPs? All right, so here's places. You can place them wherever you want to. Me, I like to place them on 10-minute candles, okay? At the beginning of the previous day, these are all 10-minute candles. At the all-time highs, at the all-time lows, at the yearly highs, and at the yearly lows. Okay, at the last lower or higher high and lows on the daily chart. Okay, on the 10-minute candle before the FOMC announcement, on the 10-minute candle before an earnings statement comes out and the thing takes off like a rocket. These are just places I like to anchor mine. And the reason is I want to see, does the market find value in this particular product just as it did before it took off after the FOMC announcement, just as it did before it took off after the earnings announcement, just as it did before the yearly high or the yearly low, because that means something to me. Does the market still find this stock as being a value? If it is, price should be bouncing off of anchored VWAP in the northern direction. It should bounce off of it, come down to it, and bounce back up. That's what I'm looking for. If price passes through anchored VWAP, okay, and does not bounce back up, it kind of indicates to me that money is coming out of that product or out of the market for that one. Okay, so how do I interpret the price action in relation to an anchored VWAP? All right, if price action is moving up and away from anchored VWAP, then money would be moving into the market or into the security. That would favor the bulls. You would want to buy. You want to buy calls, buy securities. You'd want to be bullish on it. Do a bull put credit spread, whatever. But you'd want to be bullish on it. If price action, that's me, I want to be bullish on it. If price action is moving down and away from anchored VWAP, then money would be moving out of the market or the security. So that would favor the bears. You probably want to buy puts. Probably want to do a bear call credit spread. You probably want to short the stock. That's what I'm trying to say. All right, that's what I like to do. All right, so I like to see price action. That is my 10-minute trend, okay? That's my preferable price action. Run away from anchored VWAP or VWAP, all right? That's my preferable action for price, okay? If it keeps crossing back and forth over it, I know I'm in for a choppy day, okay? Price goes back and forth over VWAP or back and forth over anchored VWAP, then I know I'm just in for a choppy day, and it's probably just better to walk away from my keyboard and get up from my trading chair, because it's not going to be. I do better when I trade trends. I like to see a trend that runs away from VWAP or runs away from anchored VWAP. That's where I do my best. Okay, so that's what I'm looking for. So I have a thing called the rubber band candle. All right, so what is the rubber band candle? This is another thing that helps me determine market direction. All right, from the point of interest. Okay, and these are examples of points of interest. The point of interest could be anchored VWAP. It could be regular VWAP. It could be trend line, high of day, low of day, midpoint of the whole move, midpoint of the day. Okay, and all right, so the rubber band candle, it's the free-floating candle after the spike candle of the point of interest, or the attached candle to the point of interest. And I know that's confusing, so I've got some examples to share with you so you can understand it. Okay, so this is another one. How do I know when the market is weak? Okay, because we experienced that today. All right, gaps are typically magnetic. All right, so we gap down today. All right, if price fails to fill the gap before noon, that's a sign of weakness. When price tries 2 times and fails both times, look out below, because there's a good chance or a good possibility it's going to return to challenge low of day. All right, that's how you know when the market is weak. All right, how do I know when the market has strength? Again, gaps are magnetic. When price fails to fill the gap up, in other words, price gaps up and it never comes back down to fill the gap before noon, that's a sign of strength. When price tries 2 times, to make a lower low and fill the gap and fails both times, look out above, because there's a good possibility it's going to return to challenge high of day. Okay, so here we're talking about strength and weakness. What else are we talking about? The rubber band candle, which I'm going to give you a clearer sign of what that is in just a moment. Okay, a break of the rubber band candle helps me determine which direction I want to trade. All right, so here is an example. All right, this red line is a moving average. It's the 200 period moving average. This is a chart of the US dollar index. Okay? It is the daily chart. It says so right there. Okay? Notice how price comes into the 200 and finds its way back up. Okay? Notice how the 200 period moving average does not let it pass through. It brings it right back up. Now, you notice as we come back up, it hits the downtrend line, or begins the second point of the downtrend line and begins to pass through it one more time to see if it can get through again. Now, if you watch this right here, you see this spike? That's the spike candle right there. See the spike? All right. The free-floating candle after it, that's the rubber band candle. Now you notice price consolidates for about 5-6 days before finally breaking the rubber band candle right there. And that's when I know I want to trade it short, because the rubber band candle is now broken. Okay, that's an example of the rubber band candle. The point of interest for me is the 200 SMA. All right, that's a powerful, simple moving average. It's quite common to see price action flinch or do a double take before passing through. It usually doesn't get through the first time, especially if it's flat or price is coming down and it's rising. All right, so here's the next one. All right, we're going to do it again. Now, the downtrend line is the point of interest. Okay, you see we've got the start and right there. So which is the spike candle? Well, this is the point of interest. Notice the spike candle is attached to the point of interest, which is the downtrend line. Okay? And then we consolidate over to the right, just as we did down here. Okay? And now we finally put in a candle over the rubber band candle, right over the spike candle right here. This is our spike candle, that doji with long wick and a long tail. Notice the tail comes down into the point of interest, which is this downtrend line right through here. We consolidate for 9 days. That's a lot of consolidation, 9 days. All right, so we consolidate for 9 days. And finally, we break above the spike candle, so that makes this the rubber band candle. If we break this, all right, I want to be bearish on the market. Why? Because the dollar, strong dollar, is not good for our goods and services. All right, when we have a strong dollar, it makes us less competitive in the global markets, and we tend to not sell as much or bring in as much revenue. and it kind of hurts our GDP in the foreign countries because the conversion rate is going to cost them more to meet one of our dollars because it's so strong. And it's better to have a weaker dollar. When the dollar is weak, all right, the markets do so much better. All right, so you can see right there, the market, the dollar is moving back up. This makes this the rubber band candle. If we break this tomorrow morning, all right, I'm going to have to remain bearish on the market because the strong dollar is bearish for our market. So you see right here, downtrend, downtrend line. All right, spike candle. Notice we bull flag up and flag over to the right. That's the spike candle. That makes this the rubber band candle because it's the first free floating candle over the spike. And you take the biggest spike, okay? And then after that, if we break over that, I want to be bearish. All right? So that's my rubber band candle, just as this was my rubber band candle when price was coming down. Okay? So here's an example of anchored VWAP. Now I anchored this VWAP right here on the day before at the very first candle, the first 10-minute candle. Now price cleared. I'm going to show you the consolidation. It cleared this consolidation right there. Price came down, consolidated over to the right. So price comes up, clears the consolidation, and the bulls strike first blood. You can see the green candle right there. The green candle completes. The very next candle's red. I can't buy that. But we got green on the next candle. I'm in on that. And you can see there is my 10-minute trend over anchored VWAP. It's anchored at the first 10-minute candle at the beginning of the previous day. And I'll show you what happened today. All right, so here's one. Price clears the consolidation. All right, the bulls strike first blood. I have a 3, which is my yellow line, on top of my gray line. That's my 8. 3 is on top of the 8. I got a green candle. The bulls strike first blood. I can get in on that, or I can get in on the next green candle. Either way. All right, I've got a 10-minute uptrend. And you notice how this 10-minute uptrend, the 3 never crosses the 8 until this candle right here. Right there. And it actually didn't even close right there. It's because this one gapped down. Right there. All right. Notice, you can stay in this all day. Have you ever been in an all-day trade? It's nice to find one of those, isn't it? When it just keeps moving in your direction all day. You don't even know what to do with yourself because you want to trade, but there's nothing to do but find a place to add more shares because it just keeps going up. And this is what I love to find. That happened to be a trend day. Let me take that off. Go to the next one. Okay. And that's not what I wanted. I think it's the next one. Here it is. Yes or no? Nope, that's not it. I had one that was... Well, anyways, you know what I'll do? I'll show you later what happened today. All right. So here is a 10-minute. Here's a 10-minute uptrend right here where the 3 crosses over the 8. You know what I'll do? I'm just going to take this out. All right, and let's just go to the SPY. Because that really didn't have exactly what I was looking for. All right, so I'm going to take this. This is my SPY chart. I'm going to go to the 10-minute chart. All right, now in order to see this, I want you to see what I do. All right, right here. Okay, so this is today's price action. Okay, so where do I plant my anchored VWAP? At the beginning, the first 10-minute candle of the previous day. Now, we were closed in observance of Martin Luther King right there. So we were closed on Monday. So this would be Friday's price action, the very first candle. Okay? Now notice right here we have consolidation. Okay? Right there. You guys see that? You got bearish reversals there, and you got bullish reversals here. So just consolidate it all day long. All right? So here's the consolidation. All right? I'm going to take that off. Notice where price opens up. Underneath the consolidation, just like the day before when I showed you that one. So you notice price opens up underneath the consolidation. All right? And the bears, they strike first blood. All right? You see that? Here's the anchored VWAP. Price is moving down and away from anchored VWAP. Okay? So we bought puts. We bought puts. Okay? So we went long on puts. Puts are another way of shorting the market. You could have sold short, but we went short on the market by buying puts. And our target was 473.65. We hit our target within 30 minutes. 10-minute candles. 1, 2, 3. Bam. How would you like to end your day in 30 minutes? All right? In 30 minutes, we had profit, and we were already taking profit right there, right into the target. Now, price did a bullish reversal right off of this anchored VWAP. Where's that VWAP anchored? I can show you. Back out here. Let's trash that off. At the previous low. See the previous low? I anchored it there. So where did the price action come to? It came right into the anchored VWAP low. So it went from one average price to another volume weighted average price. And then it bounced all the way back up to it. So we were up here, came down into this one, and went right back here. Now look what's going on here. All right. This is yesterday's close. And I think that's what I was trying to show you. Let's see if I can get it back up. Okay. Now notice that's yesterday's close. Price fails twice to fill the gap. All right. Whenever you see that happen, price fails twice to fill the gap, that's weakness. Okay. They only had like 6 cents more to go. They can't fill 6 cents. You got a bearish reversal followed by another bearish reversal. And what do you get? You got a 10-minute cross. Here's a 3 crossing underneath the 8, underneath the VWAP. Oh, that's my trade. I'm in, and I want to manage this on a 15-minute chart. So let's go see what it looks like on the 15-minute chart. Here's the 10. And you can look here. All right, there's a reason why I manage on a 15-minute chart. Notice the 3 crosses the 8 on the 10-minute chart. But watch what happens when I flip to the 15. Don't do this to me. There we go. All right. Now watch what happens. Notice the 3 doesn't cross the 8. Oh, price crosses the 8, but the 3 EMA never crosses the 8. And where do we go? Back to low of day. Where's low of day? Well, we were there earlier, 473.65, right there. Okay? Failed to fill the gap. There's a great possibility you're going to go back to low of day when you fail to fill the gap. And there it is. We had a little bounce here at the anchored VWAP, and then we came passing through, and then we hit low of day right there, and we took out the low. That's because market weakness. And that was our ability to observe the market weakness right there. That's knowing what to look for. The same thing when the market gaps up, okay? If it fails to come back down, all right, that's a sign of strength. You don't want to short that unless you can see that the market has the ability to fill that gap, okay? Again, the market had no ability to fill this gap. That's a sign of weakness. I don't want to be bullish on that because it's telling me it's weak. Look at the wicks up here. 1, 2, 3, 4, 5 wicks in a row. They're almost in descending pattern, but then you see the flutter of 15-minute candles come all the way down right there. So that's what I'm looking for. Again, I trade a 10-minute chart. Okay? Now this same price action, believe it or not, can happen on a 2-hour chart. Okay? You got a 2-hour uptrend, you can jump in and you don't have to get out until on the 4-hour it crosses back over. Notice if you're in on the 2, here's a cross of the 2. Here's the 3 crossing over the 8 on a 2-hour chart. Manage it on the 4, and you notice you're still in it. Even with this big red candle, you're still in it right up there. See that? The 3 still hasn't crossed over the 8. Now, if you want to take your profit when you see a big green candle, I don't blame you. All right? We're all in this to make money, not to hit targets. So you've got profit and it shoots off into a location that you think would be resistance. Well, that would be an awesome place to start taking some profit and then let it pass through. Let it get over that resistance and then you can pick it up on the other side. See, I'm a 10-minute trader, so I can pick it up tomorrow when it gets over there, or I can wait for the pullback, and they always have a pullback. And so I'm in no rush. When it gets to my target or when it gets to resistance, that's where I want to take some profit. And I can raise my stop up bar by bar. See this? 2-hour cross. All right, here you got the 2-hour cross. Manage on the 4. A little slow tonight. You know, put my stop underneath here, 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 put my stop underneath there. See that? And then we shoot off right into resistance. Well, how do I know this is resistance? Well, I can see the wicks over here. Okay, this is where sellers showed up last time. So I want to sell at the same place on the left-hand side that sellers sold last time. So I'm taking profit up here because I see that's where the sellers showed up last time. That makes the most sense. Where did the buyers show up? Down here. Well, if it gets back down here again, that's where I want to buy it because that's where the buyers showed up last time. So you get in on the 2. Again, if you're not a day trader, you can do this on a swing trade. There's a 2. You're in on, probably the 9th or the 8th of December or January right here. And you can see you're still in it for a whole week. Right there, manage on the 4. Or you can get out into that wick that shoots up into where the sellers are before. Right there. All right, see how this transcends, another time frame? I'm just a 10-minute trader. You can be a 2-hour trader. You can be a 2-day trader where you enter on when the 3 crosses over the 8 and you manage it on a 3-day chart. And you don't get out till that 3 crosses over the 8 on the 3-day chart. Now there's another idea right there. Wow, that's a sweet looking trade. Look at that, from November all the way to January on a 2-day and manage it on a 3-day right there. All right, so I'm going to take this down. I'm going to share with you. Okay, now if you notice, here's me in the morning. I don't know if you can read it, but it says right here at 9:40 a.m., bought 10 476 puts that expired today, right there. at 10:40 in the morning. Right here, first candle, I bought puts, all right? SPY put targets 473.65. Not even 5 minutes later, I'm telling you where I'm going to take profit. Okay, this is what it's like being in the BYOB trading room. Okay? All right, now it's 9:52, 473.65, bingo, target hit. All right, in 30 minutes, we hit a target. We come back up, we see it rip all the way back up, try to fill gap, and what do I say again? Bought 15 SPY 2 DTE puts, 476 strike again. Where am I looking? Low of day. Where do we go? Low of day. Bingo again. Just like that. Okay? 1, 2 trades in the same day on the same product. If you'd have bought 20 puts and it went $2, on the second time, you'd have made probably $2,000 to $4,000 if you had the guts to hold them all the way to low of day. All 20 of them. Okay? So there you go, right there. That's what it's like being in the BYOB trading room. You can hit it as hard as you want or as soft as you want, or you can just follow me on paper so that you can see that my trades do work. Okay? Over and over and over again, we make money all day in the markets. Here's another day. Bought calls. It says first target, SPY calls, 476.40. It's just another day of me calling them out in the room. Bingo, we hit it again. Bought some more calls. We're going up to this, It's over and over. Trend day until we get climactic. I mention it throughout the day. This is what you do. Okay, now we got one other thing I want to share with you. Now, this was brought to my attention courtesy of Alpha Dog. His name is Robert. He's a good friend, and he brought this to my attention today. And we were looking at it, and I think we've got. Thank you, Robert. By the way, Alpha Dog. I think we've got an igniting candle. I think we've got a bullish MMRP. And then people will ask me, what does MMRP? It's an acronym, and it stands for Market Maker's Reversal Pattern. All right? So instead of going sideways, we break out through resistance. Right here, see how price action went up and couldn't break through? All right? Now we bust through right there. Okay? So this would be the igniting candle. This is the pause candle. We're on a 4-hour candle now, okay? Now we're looking for price to come back here and show me that this area, this 452.25, is going to hold price as support. All right? That's what we're looking for. Price to fall back and catch on top of here as support. Okay, it's got to do that in one more 4-hour candle. All right, now after it does that, I'm looking for the first and the second 10-minute uptrends, okay? The first one's probably going to fail. All right? The second is likely going to work. So I'm looking for the first and second 10-minute uptrends. That's where the 3 crosses over the 8 on the 10-minute chart. Okay, coming right off of this 552.25 area, 552.50. That's what I'm looking for tomorrow. And then from there, I expect to get 3 more 4-hour candles, each one making a higher low and a higher high than the last candle. All right. Now, if you knew that the next 4-hour candles were going to make higher highs and higher lows, and you knew that, do you know how much size you would put on that trade? Just knowing that is what is expected to move. Now you can hold until that candle rises up over the previous candle. Okay, so that'll give you the courage to hold for longer. And then you know that it's expected to move back and make a higher low. And then you'll reload and have it, and then you'll hold that move all the way up till it makes, again, another higher high on the next candle. This is called the bullish MMRP, market makers reversal pattern. All right, now here they are. This would be the bearish one, okay? An igniting bar down. You have to fill this in, okay? You fill this in, it breaks through support. We come back and test support as resistance. And you notice, see each one of these candles? They all make a lower high. They all make a lower low. Isn't that pretty cool? If you knew this candle on the 30-minute chart was going to make a lower low, you would hold till you got to here. And you knew that this one is going to make a lower high, you know you can start shorting shares as it gets into this wick. Right up there, right? And you're going to take profit when it comes down into the tails, all right? You know it's going to make a lower low. And then the next one does the same thing. And the next one does the same thing. And the next one, look at this. This is green, but guess what? It does the same thing. It makes a lower high and a lower low. It's green, and it still does it. You see that? That is amazing. That's the power of knowledge. That's the market maker's bearish reversal pattern. Right there. All right? Igniting candle down, green pause candle. You check the resistance. It holds. Now you want that 10-minute downtrend. And you just ride that 10-minute downtrend until the 3 crosses back over the 8 or it gets climactic to the downside. See, when you spot this, call it out so that everyone can play it, because this is like gold. This is like magic. This is like money in the bank. Right there. This is the bearish one. Okay? See what it says? Fourth candle, test of support line. Okay, that the igniting candle just slammed through. It's a test to see if that area is now going to hold and provide resistance. And then it says, notice, candles 5 through 10 all make lower lows and lower highs. That's pretty cool. All right, this is the bullish one. Okay, you have an open gap, price fills the gap. Right there. See how we had resistance? Up here, price went up, couldn't get higher. Finally, we break through, come back, test this area for support. See all the tails down here? Test it for support, and now what happens? Price action gives you a higher low and a higher high. A higher low and a higher high. Oh, it's a red candle, but hey, but look. It's a higher low and a higher high. Same thing on the next one. 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 7 candles in a row. I only count on 3. But when they give me, I'll stay in the trend until it breaks. But right there is another example. That's the bullish market maker's reversal pattern. Right there. Again, you can get a copy of this PowerPoint presentation. All you got to do is email me and you'll get all of these slides. All right, so this is my performance last year. Okay, I started an account in March, $32,000. I started an account this year. It says $100,000, but I'm working on getting a $30,000 account. By the way, I'm only using $30,000 of the $100,000 in that account. Okay, so I took this from 32 all the way up here to, well, it got to a high of 823,616. And I ended the year with 804,567. All right. And I trade SPY. And I tried trading 0 DTEs. And you can see I got punished trading some 0 DTEs. Okay. See that? Almost a 50% pullback in my account value. Same here. 50% pullback. That was experimenting with zero DTEs. I'm not that good at it. I prefer to trade products that expire on Friday. And if tomorrow's Friday, then I'm going to be looking to trade next Fridays. All right. I like to have 5 or more days. All right. Preferably three or more days. What I like to see. All right, because I got time to correct it. That's why. But I tried working with some zero DTEs and I got punished right there. And you can see I stopped doing that. And this is what happens after I stop doing that. All right, so I want to say thank you for being here tonight. You can come get a trial for $24.50. I'm not going to push you. I already know my strategies work. I just showed you, oh my gosh, 8 strategies that work. Okay, you know they work. You saw them play out today. I showed you my alerts. You know, if you want to make some money, get into the BYOB room. It's only $24.50, and you can enjoy a 30-day free trial. 30-day trial, not a free trial, a 30-day trial. All right, now I'm gonna turn this off, and I'm gonna go answer some questions. I'm sure there's probably 50 or 60 of them, and that's fine. I want to help all you traders succeed. So if there's a way I can help you succeed, I want to do it. All right, so let me move this out of the way and move this up. Trader X, I believe NVIDIA is going to hit 600 for what it's worth. Your thoughts, John? Yes. Trader X, yes, I do think so. Okay, Disney is an MMRP on the daily chart. Oh, now you got my interest. Did Disney have a breakout? I do not see it. Unless it's, let me see what he said. This is Malcolm. Yeah, he could be right. Right there. See that? See what Malcolm's talking about? Now I see it. I see what he's seeing. Right here. Okay, you see this? This is the resistance. Thank you, Malcolm, for sharing that. And okay, see how price comes down and hits this as support, and then it comes up underneath it and it's resistance, and it tries and it tries, and then finally it breaks through right through here. See that? That price up. Now we're gonna look for it to come back onto support. All right, and then trade up again. I like that. Thanks, man. I'm on the 3-day chart. Oh yeah. Okay. So here's the 1 day. All right. Yes. Yeah. Yeah. Thank you, Malcolm. Thanks for understanding. I'm on the wrong chart. All right. You see what he's saying? Igniting candle up. All right. And we're gonna look for this to pause, pull back to support, and then we're gonna look for trades. 3 more daily candles, each one making higher lows and higher highs. First, we need a pause check of support. And that pause check of support, that could be 1 candle. It's not always 2 candles. It might be 1 candle. Might do the whole trick in just 1 candle. Okay? Just so you know that. All right? It may do 1 candle. Then look for that 10-minute uptrend. The first one or the second one. The second one will probably work, but watch for that 10-minute uptrend as it comes back and trades back up into the highs. Yeah. Thanks, Melinda. All right. I'm looking for a question. Your audio and video is not in sync. I'm sorry, Trader X. I didn't. Bobby's in the room. Oh, yeah. Yeah, we did that today in the room. Here's the trades right here in the room today. If I can find them. Here we are. Yep. Right there. This is us. This is Rob, Marley, Bob, Alpha Dog, everybody. Right there it is. SPY put target 473.65. Look at that. You knew about it before it even got there. Okay? You look at this chart on SPY, and we take just a 2-minute chart or 5-minute chart. Let's just take a 2-minute chart. Two-minute chart right there. First candle, red. Bear strike, first blood. Boom. All right? I'm short. I'm buying puts. This is my target. How do I know that's my target? All right, let's talk about picking targets. See this? See this wick up? See the tail down? Right there? There's price telling you that's an important number. Wick up, tail down. Right there. That's telling you that number's important. Okay? Here's anchored VWAP. Okay, where's it anchored? Low, previous low, right there. Okay? Price comes into it. Of course, we're not on a 2-minute now. We're on a 10, right? You see that? Okay, price comes into it on the 10-minute chart. One candle, boom, you hit it. Just like that. All right, any questions? I'm here to help. Any questions? No questions? Or you guys can hear me, right? Can I talk a bit about stops with SPY options? Yes. Let me just say that, when you get SPY options, a lot of times price may whip that option around. Like, I hate to say it, like, I don't know if anybody's been fly fishing, but that's what happens with the SPY option price. So I typically have to use the underlying security price to decide whether I'm going to get in or get out. Now you can put a stop on the option, but bear in mind, it feels sometimes like they target my stops when I do lay down a hard stop. Okay, but I'll say this: in times when I don't lay down a hard stop, I get burned sometimes. And somewhere between there's a happy medium for each and every one of us. For me, and it's a little bit different, all right, than you'll think of. When I get a big green candle like that, let's say my average cost is $1.50, and price is currently on that option, okay, is $1.50 per contract. And price is up to $1.80. Let's just say it's at $1.80 up here. And let's just say it's a call, all right? Just to make things easy, all right? Okay. My average, my price to get in was $1.50, and it's up at $1.80. And I might have 10 calls. Well, what I typically do is now I put in hard stops, but I layer them out. I put in a stop to sell one of those calls at $1.75. I put in another stop sell order at $1.71. Then another stop sell order at $1.67. Okay, and then another stop sell order at $1, let's just say 4 cents at $1.63, and then another stop sell. So in other words, if price comes back, they're going to run into my stops and give me profit. And that way I'm not going to get burned on the whole position as it comes back on me. In other words, it's got to run through those stops first. And that's how I do it. And it works pretty good for me. All right. But then again, you get a big candle, you want to take your profit way up there, all of it at once. I'm all for it. I'm all for making your account grow. Whatever it takes to make your account grow, I'm all for it. Just don't lose a big candle. When you get a big candle like that, don't lose that candle. Don't let it come all the way back on you. All right? Try not to. At least have your stop at the bottom of that candle right there and another partial. I try to have a partial in the midpoint because I don't want to lose all that profit. I'll take a couple up here. I'm a different kind of trader, okay? Stock goes up, I'll sell one and I'll look to reload it. And I'm not afraid of reloading it at a lower price. I'm constantly ready to reload on a dime. Whenever I sell one where I think it might be the top because it's a nice big candle or it's way up over the 3 EMA, I like to sell way up over the 3 EMA on a 10-minute chart. That's my preferable place to sell, up over the 3. And I like to reload at the 3 and at the 8. That's what I like to do. Shambi, when can we watch this on YouTube? Well, right after we're all done, I'm going to render this video, and you'll probably get to see it tomorrow morning, okay? It'll be on my channel. I hope you're a member. Hope you subscribe to my channel, Sean. ABOE. Malcolm, can you talk a bit about stock? Yeah, I like to use the value of the underlying product, which would be SPY, more so than the option price. Yeah. Thanks, Malcolm. Yeah, it'll be on YouTube. And yeah. Oh, thanks, Ed. Yeah. Yes, I would have had to. Yeah. On the zero DTEs, I had a few left, and I got out of them quickly as possible. And I like to roll into something that expires Friday. I didn't even see you there, Malcolm, today, but thanks for showing up. Ah, okay. I always look forward to seeing you. All right, traders, if there's nothing else, I'm going to go get a Coke and a smile. All right. This recording is going to be on YouTube. And for those of you that are members, you're going to find it in the members resources as well as on YouTube. All right. Thank you everybody for showing up. I hope I help you. All right, I do. I really hope I help you. That's my number one goal. Just noticing a little inverse head and shoulders on a 10-minute chart right here. We'll see what happens tomorrow. The market was weak today. See that? That was the weakness, but now we got a little inverse head and shoulders. Still got to break the neckline here. We'll see what happens. I'm just noticing this now, looking at it. Yeah. rubber biscuit and the rubber band candle. Hey. All right, everybody. Look forward to seeing each and every one of you tomorrow morning at 8. Have a good evening.